if I'm a retail investor and I'm looking to do that and invest in an IPO, what are the checks and balances I should look at myself when I'm making that decision?
Well, with any IPO, one of the first concern has to be the valuation, right? Because even a good company at a high valuation or an expensive valuation makes for a bad investment. So obviously a bad company with an expensive valuation is a bad investment, but a good company also at a high valuation makes for a bad investment. So typically what you find is, because of this gap which exists, wherein obviously the retail investor is not able to assess whether it's a good valuation or bad, you find retail investors, in a worst case scenario, would follow some pundits coming on TV and giving a buy or sell recommendation. But in most of the cases, you would find that they follow the institutional investors. And which is where I think SEBI has to be commended in terms of the steps that they've taken in terms of increasing the allocation of institutional investors, because more than anything else, institutional investors give a very good direction and sign to the retail investors about the prospects of a company and the valuation of the company. So typically you would find that in case the institutional investors portion, so just for our viewers, as we know that there are different categories of investors and there are certain allocations which have been provided for by SEBI. So typically you would find that in case the institutional category has been oversubscribed, in more cases than not, you would find retail investor category will also be oversubscribed.
Are there any sort of pointers about what to look at when you're going through a prospectus?
Well, I think one of the most important things to look at are the risk factors which are there, and here again we've seen a commendable move by SEBI, because we are in a disclosure based regime, and as a result of that, what has happened is that you've offered documents which are running into hundreds and thousands of pages.
Yeah.
Now, of course, that makes it virtually unreadable. Yeah. No one can go through a 1,000-page document for every single IPO. So you have now an abridged prospectus, which sort of summarizes the key relevant information. So that I would strongly urge any investor looking to invest in an IPO to go through before making the investment.
What about the motive for which the company is coming to the market?
As far as issue proceeds are concerned, there are 2-3 broad heads for which companies are raising money. So one is, of course, as you mentioned, to retire debt, which may not be necessarily a bad thing, because there is an interest burden which is there on the company, which sort of gets reduced as a result of that. But at the same time, you also see a lot of money which is raised in IPOs is actually not any fresh capital which is actually being raised, which can be deployed into new capacities or expansion or diversification, but essentially the existing shareholders, which could be private equity or venture capital investors, or even the promoters of the company, just sort of selling off their stake. It's not necessarily a bad thing because again, like I said earlier, given the performance of the company, it could still mean that the valuation at which the issue has been offered could represent a good growth potential. But yes, you do find that a lot of companies are raising money also just to retire debt.